Welcome back to Investing and Trading Live. Once again, I am your host, Josh Lilquist, with my good friend. I'm going to start that over. Sometimes I'm going to let the podcast run here, but you know what? When we're going live on the radio, I just got to make sure that we have it somewhat on a professional level. So let's start again. Let's restart here. There we go. Are you ready, Al?
I've been ready since we got here.
Let's start it again. That's the cool thing about the live podcast is that we're just going to let it ride.
Yeah.
All right, here we go.
What you see is what you get.
There we go. Welcome back to Investing and Trading Live. Once again, I am your host, Josh Lilquist, with my good friend and my good pal, Mr. Al Connickson, and he is the stock master today, dropping some knowledge on the stock market, how it works, how to have opportunities in your income accounts and your investment accounts, which would be those retirement accounts. 401ks and IRAs, we're going to talk about that here on the next segment. On the last segment, we talked about how this type of education just is not in schools. I do have a goal if you're listening right now and we're able to get this education, financial education, real financial education about the markets, how to invest, how to trade in our colleges, definitely reach out to me. We'd like to assist in that with our colleges. But we have a lot of people that are coming into these investing classes to get started on their next phase of their life. They're looking to build that next phase, and it starts with those investing classes. If you did miss seats for that, simply just text the word investing to the number 210-210, and that's for 2 seats, one for you and a friend. Text investing to the number 210-210. Also, we appreciate our subscribers and followers on the podcast. That's Investing and Trading Live, wherever you listen to your podcast. Al, we are going to make this the number 1 global financial podcast. So, Al, in this next segment here, let's talk through a little bit about those retirement accounts. So we started getting into the leverage side of things on the trading side of it for an income strategy, but you can also do the same thing in your retirement accounts.
Sure.
So we have a lot of listeners that are planning for their next phase of their life, which could be retirement time. And at that time, it's going to take income to live.
Exactly.
And some people have retirement accounts started, some people have enough, some people don't have enough, some people need to create that. What are some of the opportunities that you're seeing people take advantage of with using the markets, whether they have a 401k, don't have one? What are the opportunities to create and build a retirement account?
Well, the best time, of course, to start is when you're in high school, maybe when you're in your teens or your 20s. But a lot of people can't do that or don't do that. So the later in life that you start, maybe the more catch-up you have to do. And how do you do that? If you're just investing in what the typical retail trader, that's the public, is put into by an advisor or with your 401k, it may just be something like a mutual fund. But the returns are going to be mediocre. If you look at the returns over, say, a 20 or 30-year period, the public is getting closer to maybe 5-6%, maybe even less than that on an annualized basis. The S&P 500 itself does 9 to 10% over that time period. But the big players, the smart money, the big firms and the hedge fund managers and people like Warren Buffett, they're not happy with getting just what the S&P 500 gets. Oftentimes, they may be getting triple-digit return.
And that return actually isn't that good. If you take the S&P 500 historical rate of return, we'll say 8% is what everybody knows and what everybody talks about. You take $100,000, that's only $8,000. Is that can you live off of that?
No, but it's not really $8,000.
Correct.
You have to look at inflation. Look at, say, an average of 3% inflation. So
and
your buying
fees,
power,
but also fees.
and you're paying fees in there. And
so it's opportunity costs that are being missed is tremendous. And taxes,
Like
yes. People don't think about that.
Right. So, your real total returns may be closer to 2% or 1%, somewhere in that range.
That's pretty good, isn't it?
Yeah. If you get 1%, you're going to double your money probably every 72 years.
That's not too bad. So but you get people that say, well, it's better than nothing. Well, you know what? If that's what you're hoping for, stick with that then. But
a couple of things I want to comment on here before I get into the details on what you can do in retirement. You mentioned a picture. We talk about a price chart is a picture. Mm-hmm. And what you find on that picture is a culmination of all of the things I mentioned before that the smart money has already done. I mean, they've already done all this analysis. They've looked at the financials of something. They've looked at the fundamentals. They've looked at the technicals. They've looked at the earnings. They've looked at what the experts are saying. All of those things, which you can do, but by the time you analyze all the things that the pros do, there's probably about 20 different things that they look at. the trade's already over. So, if they're making their moves based on all of the things they have already done, they're showing us on a price chart where they're making their move based on that. So let them do the work, and we'll just reap the benefits of what they have already done.
Yeah.
But you have to know how to find it on a price chart.
Exactly.
That's what we do.
That's exactly what we do. And one of the things that we were doing earlier is we were talking about a couple of those different stocks. We were talking about Salesforce. We were talking about Kohl's. And I think it was Intel. You asked me what's the price of Intel right now, and I didn't have that on my chart. Remember, I was looking for the picture. Would it take me 3 seconds to get it? Mm-hmm. So the quickness and the availability is right there, and that's what I just pulled up was a price chart, which was a picture, which showed me exactly what price that Intel was at that point. So that's the ease that we have and the sophistication of computers nowadays. It's all at our fingertips. So we have the opportunity to go out there and get it.
Right. And if you are, regardless of whether you're young and you're in that accumulation income phase or you're in retirement, you still need to get some benefits. And I think, to be honest, to make it through retirement these days, you have to have some exposure to the financial markets.
Yeah.
Otherwise, you're just not going to do it. With a checking account, with a savings account, with CDs, with treasuries, they're not paying enough to get you through what could be 30 or 40 years in retirement.
Yeah, so let's just say somebody has a little bit of capital set aside. And by the way, this is not financial advice, but if somebody has, let's say, $100,000, just an easy number, what can they do? What are some opportunities? And not, by the way, not financial advice.
Yeah, no, a number of things. You don't have to look at that $100,000 as what is the one thing I'm going to invest in where I put that $100,000 into.
Good point.
You need to be diversified. And what does that mean? Does diversified mean you have some stocks or mutual funds that are in the financial area, some in technical, some in healthcare, some in consumer staples, some in consumer discretionary? Not. You're diversified, right?
Yeah.
You are within one asset class, and that asset class has huge correlation when the market is correcting or crashing.
A good example is that we talked about football earlier, having cleats, having wide receiver gloves, having lineman gloves, having shoulder pads. You can say, hey, I have a whole bunch of equipment, but it's for one sport.
Yeah, exactly. And so I've used the analogy of golfing, too. You don't play 18 rounds with one club.
Correct.
So there are different things you can do. And we mentioned before, with leverage, you can take a small amount of money. And a lot of people that are in retirement, we find in really two main categories. One is they don't have enough money, or the other is they have a lot of money, but they're afraid to put it in anything that they feel might have some risk.
And that's because they feel they have to put it all in, like you said.
Right.
You shouldn't have to do that.
No,
by using leverage, you can use a small amount to be more comfortable.
Right, and you can diversify yourself within things that are not correlated. Just an example would be, typically this is what happens, when stocks go down, the safe haven assets like gold and silver will go up in value. And we have actually seen where that hasn't happened all this last year.
That's been a correlation. But you look at the dollar,
yeah.
You can get in the currency market, so you could trade the euro dollar,
right.
Which would be, if I'm not, I guess I got to double check, and my handy dandy price chart, which would be inversely correlated with the stock market.
Exactly.
So if the dollar is going up, the stock market's probably going down.
Sure, right. Yeah, and right now the strength of the dollar has really kind of kept the consumer from going into what could be a free fall financially. And when the dollar rolls over, if the dollar becomes weak, then we've got an impact that will have it'll have a negative impact on inflation, meaning inflation will go up.
Which the dollar has had a slight tip to the upside of 4% in the past this year.
Yeah. But let me get back to diversification. If you want to use one asset class that gives you all of the diversification you need, it's the futures market. In that market, futures is a family of things, some of which are correlated, some of which are inversely correlated, some have no correlation at all. You can trade in the stock market, in the major stock markets, our markets, foreign markets. You can trade commodities. Mm-hmm. Sugar in the S&P 500, there's no correlation there. Mm-hmm. It doesn't make any difference.
What about my favorite?
And Josh's favorite, we still don't know why, but lean hogs is his favorite. As far as I know, a lean hog is a skinny pig. I'm not sure if that's true or not.
Yeah, I don't know if that's possible, is it?
But you can trade commodities. Commodities will give you a great opportunity to maybe have some investments in things that aren't going to be impacted by inflation. You can trade metals, gold, silver, precious metals. You can trade currencies. You can trade interest rates. You got the foreign exchange market, the forex market, where you're looking at the difference in exchange rates between two different currencies. So you're trading in the currency market. Who trades that market? Why is that why is that the biggest market that's out there?
$7 trillion per day, roughly.
Per day, more than all of the stock markets combined in a multiple of that.
25 times, Bob.
But why are so many companies involved in it? Well, a lot of companies now deal internationally.
It facilitates international trade.
Yeah, and they have to pay attention because they have to deal in foreign currencies. So that's a huge market, gives us some great opportunities to benefit, and both futures and forex are open basically 24 hours a day.
Yeah. So
with great leverage.
Yeah, phenomenal. And these are new terms to a lot of people, and some people are listening right now and probably like, oh, I don't know what that is. I've never heard of that before. Well, you know what? And that's why we have these investing classes, to introduce you to what these terms are. We'll define what these terms are for you so you can at least know what those are. Now, once you know what they are, then identify what are the opportunities in the markets, and that's just looking at a picture, and that's telling you what's happening. It's a story. So to come into one of these investing classes, by the way, they're free. Simply just text the word investing to the number 210-210. That's text investing to the number 210-210. One for you and one for a friend. Coming up next, we got more to discuss on retirements, leverage, the different assets. Stay tuned. We got a lot more to cover. This is Josh and Al. We will be right back.